Guys, I could tell you with all certainty that things are about to escalate in the world. And with everything going on in Russia, Ukraine, and people starting to realize that a potential global famine, at least for certain parts of the world, is on its way now because of this conflict. To say things are going to escalate may seem a little crazy, but I can assure you it probably is going to. And here's how I know. I want you to watch this clip. So if you haven't seen this video before, go check it out. It's these two ladies do a wonderful job explaining what the Federal Reserve is doing and what the consequences are going to be. And why this is so important to me is because it's not just Peter Schiff, beating his hand on the table anymore. You've got people on prominent networks now getting this information out to the mainstream, you could say. So just listen to what they say.
To the economy and the Federal Reserve that most people might be missing, that you really want people to know?
Well, the entire reason that the markets have basically flown so high so quickly, even in the wake of the pandemic, is because of this abundance of cheap money and cheap money policy. The Fed's book has doubled with no limitations from the time before the pandemic until where we are right now, and it's not going to be decreasing anytime soon. What that creates is this necessity to go towards the markets, which is why they're up, increases the risk in general, and people look at their own economies, how inflation impacts the food at their table, the gas prices at the pump, and there is a complete disconnect, or what I call a permanent distortion, because of the Fed between the markets and what people experience in their day-to-day economic lives.
All right, and one more.
Nomi, the Wall Street Journal had an op-ed the other day, and I didn't realize that how many Democrats are, who work there, how connected they were to Keynesian economics, that they ignore supply side completely. I didn't realize it was that politicized already within the Federal Reserve. Does that play a role in a sense that they already have a blind side, right? And maybe this is why they missed the transitory part of this, because they only focused on demand. And even now, we'll probably hear Powell talk a lot about demand and not supply.
No, that's exactly right.
Listen, folks, you think for 2 seconds that when people start getting out and putting the idea in the mainstream's head, right, putting the idea in your neighbor's head and your mom's head, everybody, your grandma, your crazy aunt, it doesn't matter. The average person, that the Federal Reserve is responsible for everything that's going on. Okay, all of the inflation, all right, all of the cheap money, the stock market, why things don't make sense anymore. It's their fault. You really think that they're going to allow this to happen? No, they're not. There's 0% chance that they take responsibility for this. That's exactly how you know that things are going to escalate. I don't know how things are going to escalate. It may not even be war-related. I don't know. I just know that it's going to. So with that being said, with all of these talks about even more sanctions, even against China, I started digging into how you could play that too. And one of the ways is rare minerals, because traditionally these have always been Chinese. They've certainly always been Eastern. And it's been hard to invest in the paths for rare minerals in the West. It's just not a lot of good companies, and they don't have a lot of resources. But now you have a company like MP Materials, right? 15% of global rare earth supply, right? They're the largest producer of rare earth materials in the Western Hemisphere. So look, I think if things start to heat up more so with China, never mind Russia, that's already bad enough. Like, the negative consequences that are coming because of everything in Russia and Ukraine are already baked into the cake, right? So let's say it starts to get worse. Well, if you get into anything with China, where Russia had energy exports, okay, especially in oil, gas, uranium, enriched uranium, and wheat, and fertilizer, well, China has rare earth, all right? And if we start going down that road with them, then a company like this may be in for a long road. And it's worth a speculation. For me personally, I'm going to wait to see if it either breaks up with big volume, and I'll go ahead and buy in, or I'll let it come down and retest the trend again, let it get that 200 or the trend line itself. Either one is fine for me. I don't care. Personally, I'm going to get in. I think this is a great speculation play. We can actually get a measured move price projection from this due to the way it's trending. So if we measure from the start of this wedge up, this ascending triangle, we get 24.77. We'll call it $25. 25 up from the 48 takes us to $73. So $75 would be the first target. Of course, if you do it on a percentage basis, you can simply take the raw measurement like this and move it here, and that'll give you what, $100, right? $99. So we have $73 and $99 as price target number 1 and 2. If you're looking to be in for a short-term trade, otherwise, you may very well be able to hold it longer. Now, I had a viewer ask me to take a deeper dive into a couple of stocks. We have DYLLF, Peninsula, and First Majestic Silver. So first, we're going to talk about DYLLF. Now, DYLLF is trending and charting just like everything else is in the market. You can see we had the big run-up, and now we are in a long-term sideways consolidation. So the chart looks good. It's healthy. It's strong. But what's the upside? Well, the problem, I think, with DYLLF is that they don't have very good grade of ore. And so the problem with that is that makes it more expensive. They're a higher cost mine, right? So you have Kazatomprom. They only need $40 a pound to be profitable. Some of these other companies need 60, 70, 80. And the problem with DYLLF is they're on the high end of that mark because their grade's just not that rich, right? So even though they have, 300 million pounds or so, it's just very expensive. And the reason why this is more of a problem is because as oil prices go up, then this substantially diminishes profits in these open pit kind of mines like this. So I think the upside is limited to a 2x, maybe a 3x. Anything can happen. We're obviously going to get nuts. All of these uranium companies are going to get really ridiculous when the uranium price just overshoots where it needs to be, okay? So who knows how high it could spike? I don't know. What it settles at, what it probably deserves to be at, honestly, is probably a 2x from here, maybe a 3x from here. Of course, that being said, if you get another sell-off, if anything were to happen in uranium, we touch this bottom trend line, then, the 2 to 3x becomes a 4 to 6x. So all things in mind. As for Peninsula, it's incidentally one of my least favorite also, because though it's an Australian producer, they just don't have a lot of ore. They only have like 55 or 60 million pounds total, and that just doesn't give you a lot of yearly extraction. They're going to have to find more or buy more in order to have as much upside as some of these other companies. I mean, we look at their market cap, it's 214 million. Okay, 214 million with 55 million pounds. And you compare that to what we were just talking about, DYLLF. I mean, their market cap's only 272 million, right? They have like 6 times more uranium in the ground than Peninsula does. So I think the upside to Peninsula is limited outside of some kind of, meme upswing type deal or a major news on a discovery. Again, maybe 2 to 3x without some major change in their news. First Majestic Silver, everybody's favorite silver stock. Everybody owns some, right? I mean, if you don't, you should, because you're not going to be part of the crowd when it all goes up. This is such a fun stock. Keith Neumeyer's great owner. He's one of the most bullish, meaningful people in the entire sector. I mean, when silver was started trading really low, he pulled his silver. He said, "The hell with it. I'm just not going to mine or sell any more of this stuff." And it takes a lot of guts. He's got to spend cash out of pocket to keep everything going when he does that. But he does that because he knows that what he holds is more valuable than what it's going for in the market. And you just have to love and appreciate that. But aside from that, right, where's the price going? Well, look, when that quote-unquote silver squeeze happened back here in January, we got up to all-time highs. And that was at $30 silver. First Majestic is going to overshoot. I have no clue where this company is going to end up. But you get to $30 silver. I mean, you're easily here. You're probably going to break it. You probably go to $35 or something easy on $30 silver. I'm just telling you it's going to happen because First Majestic's simply going to overshoot what it's actually worth. It's just going to do it. It's done it in the past. It's going to do it again. You get to $50 silver. You get to $100 silver. They're going to skyrocket. And it's not for no reason either, because this is a very well-run company. I mean, they're virtually debt-free. They keep adding. They keep expanding, right? They're adding to their resources. They got a lot of cash. It's a great company overall. You can see that we broke out from this long-term wedge here, and then we came back for the retest and we failed. And we've been trying ever since to get back out. But look, when you fail like this, when you do a breakout on a big pattern like this, and you fail the retest, and you kind of come down in here and come back out again, look, watch out. Because most times, this means that you're just going to swing up like this. So where is it going to end up? Nobody really knows. We just know it's going to be higher. The more important question is where to buy. So right now, if you own none, you would like to buy on another maybe retest here at this trend. Looking at the weekly chart, the 50s at 1245. We switch to the daily. We have confluence there with the 200 around 1230. So yeah, if we do some sideways consolidation, maybe a dip on this trend, these moving averages catch up, that's a buy. All right. Just get in while you can. It ain't coming back down here below $10 again. It's just not going to happen. If you don't have any, just go ahead and eyeball these trends and these price levels and see if you can't snag some. It wouldn't surprise me to see more than 10% sell-off days again before this thing takes off. We're in a very volatile time with everything in the East. So just look for the opportunity to add at one of these levels. I think anything here at below 13 is a good shot.